All right, good morning, folks. Welcome back to Profit Path. I hope you had a great weekend. I hope you're having a great week so far. So what's on the menu for today? We got some pretty interesting stuff. Futures are relatively unchanged as the market digests yesterday's gains. We have a record-setting close for the Nasdaq, so a lot of big tech names are going to be in focus today. Plus, investors are really bracing themselves for some key inflation numbers this week, so we've got a lot to discuss. But let's jump in. Okay, so real quick, taking a look at our futures, which are currently flat. So this is typically what we expect to see after a strong session like we saw yesterday. The Dow Jones Industrial Average is essentially flat. Same thing with the S&P 500 and the Nasdaq. Now, speaking of yesterday's session, we did see the Nasdaq close at a fresh all-time high. It was led by big tech. You can see right here, Microsoft, Apple, Amazon, Alphabet, Meta platforms all gained between 1% and 2%. And then we also saw a handful of other names move more than 1% higher, including Chipotle, FedEx, Salesforce, and even Nvidia rebounded after its huge sell-off last week. But today, investors are looking ahead to several key economic reports, including the Consumer Price Index, aka CPI, which comes out on Thursday, and the Producer Price Index, aka PPI, which comes out tomorrow. Both reports are expected to guide Fed expectations after last Friday's softer-than-expected jobs report. So if we do see a cooling inflation and perhaps another soft jobs report, the market will likely price in a greater chance of a Fed rate cut later this year. However, if we see any signs of sticky inflation, the market will likely push back the rate cut expectations, which could increase volatility. Speaking of volatility, taking a quick look at the VIX, which is currently down about 5.6%. The VIX, of course, is known as the Fear Index. It measures the expectation of volatility in the S&P 500. So when the VIX goes up, we have more fear in the market, and typically that coincides with selling pressure. When the VIX goes down, we have less fear in the market, and typically that coincides with buying pressure. So there's no doubt about it, yesterday was a good day for stocks and a bad day for the dollar. So the dollar index is currently down about 0.5%. Of course, this chart, is in real time, so these numbers will change. But the dollar index hit its lowest level in nearly 3 months as the market priced in a greater chance of a Fed rate cut later this year. The Japanese yen was the strongest, followed by the euro, the British pound, and the Australian dollar. By the way, speaking of currencies, Bitcoin is hovering around $48,000 after surging above $49,000 yesterday. Ethereum is also rising, but barely holding on to its $3,300 support level. Now, switching gears to the global markets, we saw most Asian markets close higher on renewed optimism over potential Fed rate cuts. So Japan's Nikkei closed up about 0.97%. We saw the Hang Seng jump 1.2%. India's Nifty closed up about 1.1%, and South Korea and other regional indexes also followed suit. So basically, the entire region is pushing higher, which is great to see. And lastly, taking a look at commodities, oil prices are climbing higher after 6 straight days of declines. So we're seeing a little bit of a bounce here. Oil is currently at about $62.50 per barrel. Gold and silver are also rising. So that's your quick snapshot for today. So what does this mean for you? Well, as we look ahead to the rest of the week, we want to keep a close eye on earnings. So Adobe and AeroVironment are set to report this week, a bunch of other names next week. And then, of course, keep a close eye on inflation data. So the market clearly has one eye on inflation data and the other on earnings. In terms of the broader market, keep in mind that historically, September is often the weakest performing month of the year. So yes, we've seen some nice gains so far this month, but we want to be cautious. And what I mean by that is we want to continue to take profits, continue to raise cash. We don't want to get caught up in a potential late summer rally. So we have to remain nimble and be prepared to deploy cash should the market pull back. Remember, when it comes to investing, patience is always the best strategy. Just take a look at my man Warren Buffett. He waits patiently for decades to make his best investments, And look at his track record. So let's go out there, crush it today, and I'll see you back here tomorrow. Take care.